10 smart money concepts and market structure indicators put through our scoring system, ranked from lowest to highest. We break down exactly what each one does, where the logic holds up, and whether it earns a place on your charts. SMC Target Liquidity, V.35. Created by WhatTrader, this Pine script indicator tracks smart money concepts' liquidity levels by marking pivot highs and lows with session-colored lines, then classifying their violation as sweeps, fakeouts, or market structure shifts. The pivot detection identifies swing highs and lows using configurable lookback, then validates each pivot by checking whether price breached the level during confirmation. Only pivots remaining intact through verification generate horizontal lines, filtering weak levels that broke immediately. Session classification color codes each line based on formation timing. This temporal context helps identify which sessions' liquidity pools remain unswept. The three-state classification evaluates price interaction. X marks sweeps where wicks touch but close back opposite side. SFP identifies swing failures, where close crosses with previous close on opposite side. MSS denotes structure shifts when close breaks through and continues across consecutive candles. Array management limits active lines to user-defined maximum, automatically removing oldest levels when new pivots emerge. The core methodology assumes institutional algorithms target obvious liquidity pools at swing points, oversimplifying actual market microstructure. The three-state classification adds structure, but doesn't validate whether these patterns precede profitable trades. It executes session-based liquidity tracking competently with useful manual label controls and clean multi-state classification. The session color coding provides genuine temporal insight for Forex traders. However, it remains fundamentally a pivot marking tool with SMC terminology layered on top. The value exists in organized level tracking and visual session awareness, rather than confirming actual smart money activity. Orderblock Footprints. Created by Algo Alpha, this Pine script indicator combines order block detection with volume footprint analysis to reveal institutional trading activity at key price levels. The detection mechanism tracks cumulative impulse distance for bullish and bearish candles, applying z-score calculation across configurable window to identify statistically significant moves. The footprint visualization breaks each order block candle into vertical price rows, distributing lower timeframe prints across these levels based on close price location. Delta values at each row are color-coded from bearish red to bullish green, creating a heat map showing where buying or selling pressure concentrated. TPO counts appear alongside gradient bars to indicate trade activity density. Absorption detection becomes the practical edge. When price revisits a bearish order block and the upper wick contains positive delta prints, the indicator flags potential absorption, institutional buyers stepping in against expected resistance. Conversely, negative delta in lower wick of bullish order block retests signals selling absorption. The percentage labels quantify absorption strength relative to total bar activity. The volume ratio bars split each order block horizontally to show up volume versus down volume proportion. Real trading centers on waiting for price to return to these zones and watching for absorption signatures. A trader might short into a bearish order block. The footprint rows reveal precise entry levels where most aggressive prints occurred. It merges order block theory with granular volume analysis, providing actionable absorption signals beyond basic zone marking. The footprint implementation adds genuine insight into order flow at institutional levels, though visual density and processing requirements limit accessibility compared to simpler order block indicators. The z-score filtering removes much subjectivity from zone identification, while absorption detection gives traders concrete rejection signals rather than relying solely on price action interpretation. Volumetric supply and demand. Published by Boss Waves, identifies supply and demand zones using swing pivot detection filtered by an impulse size requirement, then populates each zone with a volume distribution profile and a delta profile. Rather than a plain-colored rectangle, each zone contains a breakdown of where volume was concentrated and whether activity inside it leaned toward buying or selling pressure. Zone creation requires the pivot to be followed by a price move clearing a configurable ATR multiple, defaulting to 1.2 times ATR. Small, sluggish pivots that fail to produce a meaningful departure are filtered out, because a legitimate supply or demand zone should be left behind by a strong move away from it. Once a zone is confirmed, the indicator looks back across a configurable number of base candles to define the boundaries. Zone height is capped at a maximum ATR multiple to prevent excessively wide zones forming during high volatility periods, which would reduce their usefulness as precision reference levels. The volume profile divides each zone into up to 30 rows and distributes historical volume proportionally based on candle overlap with each row. The row with the highest volume is marked as the point of control with a white line, and bar widths scale to reflect relative concentration. Transparency decreases as volume density increases, making the most traded price levels immediately visible. The delta profile sits on the right side of each zone. It uses candle direction as a proxy for buy and sell volume, allocating bullish bar volume to the buy side and bearish to the sell side. This is a candle-based approximation rather than true tick-level data, but it adds directional context that a plain volume profile cannot provide. Zone merging combines overlapping same direction zones rather than stacking them. Boundaries are unified, volume and delta profiles are summed row by row, and the point of control is recalculated. Touch counting updates the zone status from fresh to tested after the first contact, and an information box alongside each zone summarizes type, status, total volume, total delta, and touch count. In practice, the point of control is the most actionable output. Rather than treating the full zone as a broad entry reference, a trader can use the point of control as a precision level within the zone and check the delta profile to assess whether the volume that formed it leaned in the expected direction. If a demand zone shows strongly positive delta across the lower rows, that adds confidence that buyers were genuinely active at that level. The impulse filter and combined volume and delta profile give this tool more analytical depth than most supply and demand indicators, and the zone merging logic is well implemented. The delta approximation from candle direction, rather than actual tick data, is a meaningful limitation, and the indicator would benefit from a quality scoring system to help traders prioritize which zones deserve the most attention. Volume gaps and imbalances. Created by Zierman, this indicator constructs a volume profile that reveals price levels with zero trading activity alongside a delta analysis panel. It processes up to 2,000 historical bars, dividing the price range into customizable rows, 10 to 100, to create a horizontal histogram showing where volume concentrates and where it's entirely absent. The profile separates bullish and bearish volume at each price level, displaying blue bars for closes above open and orange bars for closes below. The normalization scales each row's width proportionally to the maximum volume level, making visual comparison immediate. The zero volume detection algorithm identifies price gaps where no trades occurred, marking these imbalances with highlighted zones that extend from their formation point forward in time. These zero-volume zones represent true market inefficiencies, where price moved without resistance, creating magnetic levels that often attract future price action as the market seeks to fill gaps. Traders use these for targeting retest entries or identifying potential support and resistance where no prior agreement on value existed. The Delta Summary panel aggregates buy versus sell pressure across vertical sections of the profile, calculating percentage dominance for each segment. This reveals whether institutional participants were accumulating or distributing at specific price ranges. The configuration allows traders to adjust look-back periods for different time frames, modify the number of profile rows for granularity preferences, and customize the Delta panel's section count, 1 to 100, for detailed or broad buy/sell pressure analysis. It delivers genuine market structure insight through volume distribution and gap identification, providing actionable data about price inefficiencies. The Delta integration adds institutional flow context, though the tool requires understanding of volume profile concepts to extract maximum value from its simultaneous displays. If you want a complete trading system with full customization so you don't have to jump between tools, Quantum Ribbon Pro was built for that. Link in the description. Let's continue. Market Structure Break and Orderblock Probability Toolkit, published by LuxAlgo, combines market structure break detection with a momentum filter and order block identification with a quality scoring system. It does not just mark zones mechanically, but attempts to weigh them by the conditions under which they formed. Market structure breaks are detected when price closes beyond the last confirmed pivot, high or low. The momentum z-score filter is what separates this from simpler implementations. The indicator calculates a rolling price change over 50 bars, derives the standard deviation of that change, and expresses the current bar's momentum as a z-score. A break only registers if that z-score exceeds a configurable threshold in the corresponding direction, defaulting to 0.5. This filters out weak, low-conviction breaks and focuses attention on those carrying genuine directional pressure. When a valid break fires, the indicator looks back up to 10 bars to find the last opposing candle, which defines the order block zone. The top and bottom of that candle set the zone boundaries, and a point of control line is drawn at the midpoint. Each zone receives a quality score between 0 and 100. The score combines the absolute z-score value scaled by a factor of 20 with the volume percentile rank of the break bar measured over a 100-bar lookback. Zones scoring above 80 are classified as high probability zones and rendered in a distinct teal color for bullish and red for bearish, making them immediately distinguishable on a crowded chart. Order blocks remain active until mitigated. On mitigation, the block either disappears or turns gray, depending on whether the display mode is set to present or historical. Historical mode shows where price has already been and whether respected zones formed clusters at meaningful levels. Present mode keeps the chart clean for live decision-making. The overlap detection option suppresses new order blocks that fall within the price range of an existing unmitigated block, preventing redundant zones from stacking in the same area during trending conditions. The dashboard shows a reliability percentage from the ratio of mitigated blocks to total blocks formed, and a count of currently active high-probability zones. If the reliability figure is climbing, a high proportion of order blocks are getting tested, which validates the detection methodology on the current instrument and time frame. The most direct strategy application is using high-probability zones as entry areas on pullbacks, following a confirmed structure break. A bullish break with a high-scoring order block left behind gives a defined zone to watch for re-entry, with the point of control as a precision reference for positioning. The momentum z-score filter applied to structure breaks is a genuinely useful addition that separates this from purely mechanical order block tools. The quality scoring system gives traders an objective basis for prioritizing zones rather than treating all blocks equally. The dashboard feels underdeveloped relative to the depth of the underlying logic, and the session and overlap features feel supplementary rather than integrated into the core concept. Precision Market Entropy Heatmap, created by LuxAlgo, takes a different approach to the volume profile concept by dropping the traditional histogram entirely and replacing it with a session-based heat map. Each anchor period, daily by default, gets its own block of color-graded rows that map where volume concentrated inside that session, with a developing point of control that updates live as the current session unfolds. The script anchors to a time frame of your choice, daily, weekly, or any custom interval. And within each anchor period, it pulls intrabar data from a lower time frame, by default the 1-minute chart. Every lower time frame, high, low, and volume reading gets distributed across a row grid, weighted by how many rows the bar physically spanned. As volume accumulates per row, the indicator paints each row with a color gradient that runs from a low-intensity background tone, through a midpoint, up to a hot peak color that marks the highest volume row in the session. The result is a clean visual gradient that makes it instantly obvious where price found acceptance versus where it just passed through. The point of control for each completed session is plotted as a horizontal line that automatically colors itself based on whether price is currently trading above or below it, and there is an optional developing point of control polyline that traces how the highest volume row migrated through the live session. That migration view is particularly useful because it shows the audit trail of where the auction was building consensus rather than just the final result. As a confirmation tool overlaid on a trend or structure-based system, it functions as a high-quality context layer that tells you which prior session levels are likely to act as magnets or barriers. As a standalone system, it is purely informational and does not generate entry signals at all. The limitation here is that the heat map is built from total volume per row rather than separated buy and sell pressure, so it tells you where volume happened, but not who was in control at each level. For traders looking specifically for aggressive buyer or seller imbalance signatures, this tool will not surface that directly. The intrabar precision is also tied to the lower time frame selected, so on very long anchor periods, the data load can become heavy. The developing point of control feature is genuinely useful, and the multi-session structure is well executed. It still operates on aggregate volume, rather than true buy-sell separation, which leaves a precision gap a real footprint implementation would close. Orderblock's Volume Delta 3D. Created by FluxChart, this indicator combines order block detection with volume delta analysis and 3D visualization. The system identifies order blocks through a point-of-control methodology that scans for break-of-structure events, then anchors zones at candles where price touched the most frequently tested level during the preceding range. The break-of-structure logic triggers when price closes beyond recent swing highs or lows with adjustable strength of 5. Volume delta measurement operates on either chart timeframe or lower timeframe data through security calls. For each identified order block, the system aggregates total volume, bull volume from close greater than open candles, and bear volume from close less than open candles that occurred at the point of control level during the formation range. These values convert to percentages displaying the bull-bear split within each zone. The 3D visualization constructs polyline depth faces using ATR-scaled offset coordinates, creating a perspective effect where zones appear to have front faces and top surfaces. Users choose between horizontal display with bull-bear split, shown top and bottom, or vertical display, with split shown left and right across the zone. The depth parameter controls how pronounced the 3D effect appears. Order blocks remain active until invalidation occurs via wick penetration or close beyond the zone, which is user selectable. The retest detection requires a very specific condition. The candle must open and close outside the zone while wicking into it. This ensures the retest happened during a continuation move rather than consolidation within the zone. Customization includes swing length, invalidation method selection, number of nearest zones to display ranging from 1 to 20, zone extension in candles, and comprehensive volume delta controls, including time frame selection and display style preferences. The point-of-control-based methodology actually advances beyond basic order block indicators by identifying the specific price level where institutions likely place their orders. The volume delta integration adds real evidence of buying and selling pressure rather than just guessing at order flow. The 3D visualization looks impressive, but doesn't add much analytical value beyond aesthetics. Supply-demand zones. Created by Project Syndicate, this script identifies supply and demand zones using pivot highs and lows, then tracks them until price invalidates them. The detection uses swing length for sensitivity. Higher values create fewer but more significant zones, while lower values catch more potential areas. Each zone is clamped between minimum and maximum heights, based on ATR multiples. What sets this apart is the comprehensive zone tracking. Each zone displays its height in pips, creation session, Asian, London, or New York, age in bars, distance from current price, and a calculated strength score from 0 to 10. Zones automatically hide when they become too old, or when maximum zone limits are reached, keeping the chart clean. In practice, these zones work well as decision points for entries and exits. Fresh zones from key sessions with high strength scores tend to hold better than old, retested zones. The retest markers show you when zones have been challenged. Strategy-wise, you can trade bounces off active demand zones for longs and rejections from supply zones for shorts. Another approach is waiting for zones to break, then trading the momentum in the break direction with a stop just inside the broken zone. The zone management is sophisticated with smart merging, height clamping, and automatic cleanup that keeps charts readable. The strength scoring and detailed labels provide genuinely useful information for decision-making. The tracking of retests without creating separate signals is well executed. The only notable limitation is the requirement to set minimum distance between zones, which can cause you to miss valid levels when volatility creates multiple significant pivots close together. Market Structure Dashboard. published by Flux Charts, consolidates several layers of price analysis into a single overlay table that updates bar by bar, giving traders a compressed but detailed view of what is happening across 7 configurable timeframes simultaneously. It tracks 5 dimensions per timeframe: EMA trend direction, swing high and low positioning, market structure labeling, order block proximity, and fair value gap detection. The swing position display renders a visual bar showing where current price lands within the swing range, and flags liquidity sweeps when price dips below or pushes above the boundary before reclaiming it. That adds a layer of nuance most structure tools skip entirely. Structure labeling follows the standard higher high, higher low, lower low sequence, tracking the last 3 confirmed swing labels and overriding them in real time when price breaks a prior pivot before a new confirmed swing forms. Order blocks and fair value gaps are tracked for proximity. The dashboard tells you not just whether a zone exists, but whether price is currently inside it and how far away the nearest unmitigated zone is. That distance displays in percentage terms, raw price, or pips, making it functional across asset classes. Below the multi-timeframe panel sits a current timeframe section covering volume state, volatility state, and swing range position. Alongside that, the market context panel handles session identification, ICT-style kill zone detection across 5 windows, and a weighted trend bias score that aggregates directional signals across all enabled timeframes into a single label, ranging from bearish through to bullish, with lean states in between. That bias engine works by assigning weights to each timeframe. Traders can configure which factors feed into the bias calculation, choosing any combination of structure, order blocks, fair value gaps, EMA, and swing position. An optional HTF level section surfaces previous day, previous week, and previous month high and low prices, as both dashboard rows and plotted lines on the chart. The most practical application is top-down confluence stacking. A trader might wait for the daily and 4-hour timeframes to show aligned bullish structure with a nearby bullish order block, then drop to a lower timeframe for an entry trigger when the bias panel confirms the same direction. The kill zone column adds timing awareness, and the bias score gives a quick directional summary without needing to scan each row manually. The alert system covers swing breaks, sweeps and reclaims, structure bias changes, price entering order blocks or fair value gaps, EMA trend flips, volume and volatility state changes, session and kill zone transitions, trend bias shifts, and all 6 HTF level break and sweep combinations. Traders can run this without watching the screen and still get notified when conditions change across any monitored time frame. The combination of multi-timeframe structure, zone tracking, and a weighted bias engine in a single panel is genuinely useful and not trivially replicated. The alert system is one of the more complete implementations available on the platform. The indicator is data-heavy and requires the user to already understand institutional concepts to extract full value from it, which narrows the accessible audience somewhat. ORB plus key session levels. Created by Quant Crawler, this comprehensive system tracks opening range breakouts alongside multiple session ranges, including previous day high and low, Asian, London, New York AM, and New York PM sessions. The ORB section lets you customize start time and duration. Each session tracks its high, low, and optional midpoint, with extending lines and labels. The most valuable addition is the ORB trade signal system with 3 entry modes. Breakout mode enters immediately on candle, close through the level. Retest zone mode waits for price to wick back to the broken level before entering. Retest midpoint mode requires price to pull back to the ORB midline before triggering. Each entry includes automatic stop-loss placement using midpoint, opposite side, or fixed points, plus up to 3 take profit levels with customizable risk-reward ratios and partial exit quantities. The session levels provide context for where institutional order flow concentrates, with previous day levels acting as magnetic price points. The fair value gap detection adds another layer of confluence for entries. The higher timeframe bias dashboard analyzes market structure on 2 timeframes, showing whether recent swings are creating higher highs and higher lows for bullish bias, or lower highs and lower lows for bearish bias. The extensive alert system fires for every level break, FVG formation, and HTF bias change, making it suitable for semi-automated trading through webhook integration. The code quality is excellent with proper variable tracking and no repainting issues. The only reason it's not a perfect 10 is the sheer number of inputs and features can be overwhelming for newer traders, and the visual can become cluttered when all features are enabled simultaneously. And if you want something that goes beyond what any of these free tools offer, that's where our Pro Suite comes in. On top of well-known QR Pro, our new addition, Quantum STS, pre-calculates entry and exit levels from backtester data and adaptive ATR, with discretionary layers you can add on top for full control. If you want a closer look, the link's in the description.